And good morning, ladies and gentlemen. This is Butch Options University. It's Monday, June 24th, 2013. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit. And as always, do not trade with money that you cannot afford to lose. Taking a look at the week that just took place, looking at the Dow, the NASDAQ, the S&P 500, and the Russell 2000 indexes, as we can see, as we look at the percentage change for the week, we see negative numbers, basically around 2% down for the week, as we found the air up there was getting too thin. Looking at year-to-date, percentage-wise, we see that we still are still very strong for the year, as we have certainly had one of the big uptrends that we've seen for a while. Dow up 12.9%, NASDAQ up 11.2%, S&P up 11.7%, and the granddaddy of them all, the Russell 2000, up 13.5% in a year that has been certainly bright move for all of those bulls out there after our election. And finally, taking a look at what the economic announcements we're looking at for this week, let's take a look and see what we've got on Monday. And we see the first thing we have of interest is the Dallas Fed Manufacturing Survey comes out Monday at 10:30. Looking at Tuesday, we see prior to the market opening, we've got durable goods orders coming out. We got the S&P Case-Shiller HPI coming out, and then at 10 o'clock we have consumer confidence, more important of the two, the other one being the new home sales. So certainly some interesting information coming out this week, early in the week, and with the economics announcements being able to move the market. Certainly news overpowers everything. Richmond's Fed Manufacturing Index coming out at 10 on Tuesday also. So quite a day on Tuesday as we have some interesting numbers coming out. Then on Wednesday we have the big kahuna, the GDP, coming out. See what the overall economy is doing. See whether there's any justification in what was said last week at the Fed meeting. And these are the kind of announcements that certainly will affect what the Fed does as far as interest rates and bond buying and QE3 and so on and so forth. Every Thursday morning at 8:30 we have jobless claims at 8:30, which tells us about the previous week's jobs numbers, and that is there again on Thursday. We have personal income and outlays on Thursday morning. Pending home sales index is 10 o'clock on Thursday. So we see that we're certainly punching out some news this week as we end this month of June. On Friday we got the Chicago PMI at 9:45 and consumer sentiment at 9:55. Two odd times for economic announcements, but they're the same way every month. So a week loaded with economic announcements that certainly are capable of having an influence on where the market's going. As we see, we've had a few weeks of a downtrend here where we've ended up with negative numbers. Looking at the SPX, you see that as we look at our overall trend, we are in an uptrend, but we have actually broken down. We should be thinking about sideways trend. As we see, we broke down from that upward trend line that we have highlighted there. And so our trading range has certainly broken down, and we're kind of thinking about a sideways trend here. Now the real question is, are we going lower or not? Well, if we do go lower, what can we expect? Right around 1550 certainly wouldn't be unreasonable. 200-day moving average sitting there at a little above 1500. So these are certainly numbers that are within range if we do have our summer pullback. At the moment we're sitting at a long-term support line at 1576.09, which we see we've been carrying forward for quite some time. And we'll see whether that's enough correction or whether we're going down further. 200-day moving average again slightly above 1500. So with that in mind, let's take a look at the week that just took place. You saw that on Monday and on Tuesday we were in a slight uptrend, and then boom, news hit. Bernanke spoke. News overpowers everything. We had two huge down days. We still ended up with a lower high and a lower low on Friday. However, we did at least have a white candlestick there, a bullish candlestick, between the opening and the low. 200-day moving average, again, sitting there at 1500. Notice that we're starting to see some turn down on the 30-day moving average and the 50-day moving average. Certainly no cross over at this point. Went right down to that previous support line we had, and we're we'll see whether we're going to go down further or whether it's time for a little bounce after that huge 3 down days last week. All right, with that in mind, that's the SPX. Let's take a look, see what the Dow did under the same circumstances. Looking at the Dow, you see that Dow came down. Didn't look quite as horrible as the SPX did, but look at that volume on Friday. Huge volume, as we have the potential for a turnaround here, as there was quite a bit of buying and selling within the Dow on Friday. So it'll be interesting to see where the market opens on this Monday morning. Looking at the NASDAQ, again, we saw a big gap down on Thursday. Big gap down on Thursday, and then, a potential turnaround candlestick, but remember, it doesn't mean anything until we get confirmation. So NASDAQ, nice little pullback on NASDAQ. All of the indexes coming back about 2% for the week. Russell 2000 gave us a doji, basically, if you want to look at it that way, and it's just right underneath that 50-day moving average. So we'll see whether we get a turnaround with higher highs and higher lows as we go into this week. Lots of economic announcements this week, and they certainly could influence where this market goes. Are we headed down for that 200-day moving average, or is this enough pullback? Time will tell. All right, fine. Looking at the Russell 2000, we see great strength in it. It is the granddaddy leader of them all so far in 2013. Looking at the VIX, we've got our spike, but you notice we had a higher spike back here in December, right near the beginning of the year. So we'll see whether we're headed higher on that, but we definitely moved up in that 2021. So we're getting what healthy markets call a pullback, which certainly is to be expected at some point, as this market just ran and ran and ran for the last how many months? I mean, 8-9 months. So we had quite a run up and a strong bullish move, and this is what healthy markets do. Looking at the bond market, we see the bond market has completely fallen apart, down to 108, and doing it on volume. So the bond market is not showing us any strength whatsoever as the market pulled back. Interesting. TLT is our ETF for the bond market, and it is in a downtrend. TLT bond market. Next, let's take a look at gold, our safe haven. There was no great fear in the market to head to gold as gold got hammered on this pullback this week. So where is gold going? Well, right now, looking at the last 3 months, there is no support there. We'd have to look at a chart further back to find out where the support is on gold. Definitely in a downtrend, as we see we're no longer near that $1,800 an ounce. After looking at gold, let's go ahead and take a look at the volume and see what kind of volume we had on Thursday and Friday. As we saw Thursday with that huge down day, showed us big volume. And then on Friday, as we got a bit of what could be a hanging man, we'll see whether we turn around looking to see what happens this week. But huge volume during the sell-off, as we saw it accelerate some. I certainly wouldn't call it a panic in any way, shape, or form, though. All right, so nice. The biggest volume we've seen in the last 3 months took place during this sell-off. Looking at XLF, our Spider Select Sector Fund, which gives us the financials. Look at the strength that we see here. Any kind of news that we're getting out of this, if we see interest rates head up, should be good for our banks, allow them to get more healthy. Instead of just doing it with fees like they've been doing it. We see big volume as it held its own, sitting above that 50-day moving average. One of the stronger looking charts, the XLF, shows us the financials are sitting better than we would expect them to be sitting with that kind of a pullback. It held up very well, strong relative strength to the overall market. Looking at oil, we see a big pullback in oil as the market went on. So we've got that pullback down to the 50-day moving average, closed below that 50-day moving average. Oil seems to really be going much of nowhere, kind of trading within a certain trading range. And we'll see whether it continues in that same trading range or whether it breaks out. USO, our ETF for oil, showing us that oil's basically going nowhere. All right, so those were our indices that we look at and our sector funds that we look at. And for those of you that are gold members, stick around. We'll look at our stocks to watch, see how they fared during this big pullback in the market. And for the rest of you, thank you very much for being here. This is Butch Shorak, Options University. University. It's Monday, June 24th, 2013. Thanks again for being here. We'll see you next week.